morning, good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar. We are the short-term traders with the long-term plan, and our plan is to be here and weather this storm. And one of the only ways that I know, or I should say one of the best ways that I know to accomplish that, is the use of technical analysis, traders. I have shown you in many videos how well technical analysis works. With that in mind, video for 11/04/08 Tuesday, we are looking at inverted head and shoulders formations showing up all over the charts, traders, all over the indice charts around the globe. And I am here to tell you that inverted head and shoulders formations in a bearish market usually produce nothing more than a muted rally, if that, and then the market continues down in the bearish direction. So when you see these inverted head and shoulders, yes, you can get some sort of a rally. Almost always that rally will peter out and the market will continue to go down, and that's if you even get a rally from an inverted head and shoulders pattern. Now, not to confuse you, in a bullish market, an inverted head and shoulders would absolutely be a buying signal and a continuation pattern going higher. In the bearish market, as you know we are in world indices, an inverted head and shoulders will make the markets continue to go lower, even if there is some sort of dead cat bounce off the head and shoulders formation. With that in mind, traders, I would like to take you into some charts right now, show you what those look like, and then when we come back, we'll talk about currencies and the market tomorrow and what we plan on doing. So let's go look at some charts. Okay, traders, what you are looking at right now is the S&P December daily bar chart. And you see an inverted head and shoulders right here. It clearly shows up in many of the world indices, which we will look at in a moment. I am here to say that inverted head and shoulders formations showing up in a bear market usually produces a muted rally at best and should be considered a continuation pattern. Many people have written to me in this last day and a half and said, Oscar, look, it's as bullish as the day is long. We have an inverted head and shoulders. It's going through the roof. And I say, no way. Jump in TV land with the rest of those nuts if you think the bottom is in. This is merely an inverted head and shoulders, and it will, if anything, produce a muted rally, which will then need to be sold anyway. Here's what's interesting. If we do get a rally out of the head and shoulders, the projection off this head and shoulders goes up only to about here, and that would give us a double top if it got there, illustrated by that line. So even if it moves up a little bit, we always sell double tops. I welcome the move if it comes. I just want you to realize you should not get happy and think that this is the bottom of anything more than just a little dead cat bounce coming from an inverted head and shoulders, and that is if we even get a rally. So let's see what happens here, traders. I'll show you a few more charts now to see if we can't convince you that an inverted head and shoulders pattern in a bearish market does not produce many rallies. Let's look forward. Okay, traders, you are now looking at the German DAX December daily bar, the German DAX. You see that we have an inverted head and shoulders right here, and like the S&P, there's a high sitting out here, illustrated or marked off by this line. If in fact we got a rally from this, we would likely hit that and have a double top, which we could sell anyway, if we got a rally. But if you look back here at this inverted head and shoulders, traders, in a bearish market, we didn't get a rally off of that, traders. It went straight down when it came out of the right shoulder. Now, this market up here might not look bearish to you, but all this downside makes the chart look flat here. But in reality, this chart starts here and just goes straight down. Just can't all be illustrated because of how much down we've gone. But inverted head and shoulders right here may produce nothing more than a dead cat bounce, if that. Otherwise, it breaks down anyway, just like it did in the past. That's the German DAX, right? So you've seen an S&P, inverted head and shoulders. Now you see one that failed in the German DAX, and there's another one right here. while indicators, technical indicators, are all getting very overbought and looking tired, getting ready to turn to the downside. At the same time, you have an inverted head and shoulders. I say this market will not go anywhere. Dead cat bounce maybe, and down we go. Don't fall in love with the upside yet in the indices, traders. Let's look at a few more charts here. Okay, traders, once again, we are now looking at a daily bar chart construction, but this is of the FTSE, Financial Times Stock Exchange from Europe, from London. Once again, you see we have a head and shoulders formation, and it went nowhere because it was inverted and in a bear market. Many of the videos that we have done in the past, traders, when we were at the top of the market, it put in a head and shoulders of that formation. That's an upright, and then the market cracked. Well, we are not in that market right now, traders. We are in a bear market with an inverted head and shoulders, and I am here to tell you that they do not usually produce much of a rally. Once again, on the FTSE, if it rallied, we have a high sticking out right here. We've marked it off. If we rally, maybe we'll hit that and put in a double top, which is something we can sell anyway. So this looks like the DAX, looks like the S&P, and you see that these formations do not hold very well in a bearish market. Yes, you could get some kind of a bounce, but I'm not looking for too much of a bounce. Even if we get one, we are in a bear market. I will not fall in love with the upside here, and I'm presenting these charts to you so that you do not fall in love with the upside either. Let's look at a few more charts here, traders. Okay, traders, London, Germany, the United States. Now we are looking at Japan, the Nikkei. Once again, daily bar chart construction. You can see right here, clearly illustrated, there was one of these very narrow inverted head and shoulders formations. That formation did not produce a rally. It did produce a break. We have another very narrow, very skinny two little shoulders, a thin head, inverted head and shoulders formation. I'm saying that this will turn around and break just like that one did. At best, you'll get a little bit of a muted rally up to the double top if it ever presents itself, and down we should go anyway. So as you can see around the globe, it's not just here in the U.S. markets, it's happening around the globe. These head and shoulders formations inverted, and they should produce a continuation back down. Let's see what we get, traders. A couple more charts to show you. Okay, traders, we are now looking at the Dow Jones Industrial Average Daily Bar Chart. The Dow Jones had around the same time that very same, very narrow, inverted head and shoulders formation. Nothing happened but a drop. Here we are again, right after a serious drop. We have a very narrow, very little inverted head and shoulders formation, and it looks to me like it's just going to peter out and break right down. Yes, we have an election coming tomorrow, so anything can happen, but if you do get a rally, traders, look to sell it into that double top and expect some downside action. I am now going to take you back a few months when we had another very large, a much larger inverted head and shoulders pattern in this very same chart, and I want to show you what happened after that pattern was finished or completed. Okay, traders, we are now looking at the Dow Jones Industrial Average daily bar chart, but back in Feb 2008, this year, the beginning of the year. We put in what looks just like the ones we're looking at today, an inverted head and shoulders formation. You can see it right there. Of course, it's marked off for you. The market did not rally, traders, did not rally. In fact, marked a lot of times sideways. Now, interestingly enough, right next to this one, you could argue that this is another head and shoulders inverted, which did produce a rally. But look at how fat and long, look at how long it took to create that one and how thick it is. And all it did was produce a small rally, which then broke back down again anyway. So even when they do show themselves in a larger, thicker, taking more time to create pattern, if it's an inverted head and shoulders in a bearish market, all you get is a little dead cat bounce, which you can then sell once again. The ones we're looking at now are much thinner, like this one, like the ones we just looked at. That's happening today, and I don't think you'll even get this much of a bounce out of it. I think it just turns around and dumps. But let's look just to make sure we got this right. Okay, traders, we are now looking at the NASDAQ December daily bar chart, the NASDAQ, and as you can see, there is a head and shoulders inverted formation right here. I do not think it will produce much. If it does, you can have a double top put in right up here around the 1500 mark. I don't think we could get there, but imagine if it did. If it does, you would look for a top to come in here and you'd sell it back down anyway. So even if we get a rally from the inverted head and shoulders, which I don't really think is coming, you need to sell that rally. The inverted head and shoulders formation showing up in a bear market is generally considered a continuation pattern. Do your own homework and see if it agrees with mine. So, you've seen those charts, traders? You see those head and shoulders inverted formations that I showed you in the past? They didn't produce much of a rally, if they produced a rally at all, and the market turned and dumped. That is what generally will happen in a bearish market that produces an inverted head and shoulders formation. Traders, again, if you have a market that produces one of these, after it's been going down for a while, usually it will go up and continue down again. A continuation pattern in a bearish market is what that is. That is what I have found after doing analysis for many, many years. So do not be fooled by these inverted head and shoulders. Okay, when we left off with our last video, we talked about currency markets, especially the European currency markets. We showed you a swing day. We told you those markets were going to break after the swing day. They have broken. They're on their way down now. We are bearish. European currencies for sure. We're looking for the downside. We are looking to sell them at some point this evening or tomorrow if they reach our sweet spot. I will keep you informed at my site. Please come on down to www.livewithoscar.com. Grab yourselves a free membership, jump in the chat rooms, and be there when these markets reach their sweet spot so we can give you the signals to trade. Okay, traders, do your homework on currencies. I'm telling you right now, they are going down. The ECB, the Bank of England, there's interest rates being lowered all over the globe. In fact, Australia lowered theirs this evening. Interest rates will be lowered all over the globe. The United States basically has reached their bottom. We have interest rates now down at 1%. We were at 1% in 2003. We haven't been below 1% since 1956, if I remember correctly. The last time we were down there was in the 50s. So it's not likely that the U.S. is lowering rates anymore, which means dollar strength and other currencies must come down, traders. That's what happens when one country doesn't lower rates and others do. Everyone plows into the country of the currency where the rates aren't going down. Maybe the Fed can lower a little more and go past 1, but where are they going? We're at 1 already. Everybody else is up in the 4s, 3s, 4s, 5s, and 6s with their interest rates. So traders, this one is a no-brainer. Currencies are going down, baby, so get ready for the downside. All right. Today is election day in the United States. We are getting a new president, and I don't care who they elect, this market craps out just like it's been doing. Don't get fooled. A lot of people in the press are saying, oh, the new presidency, the bull is in. Where? Where is it coming from? The layoffs that we are going to see hit the unemployment figures at the end of this week and the end of next month's figures are going to flatten this market, traders. There have been layoffs across this country and across the globe. Everybody's laying off. That has to trickle into the economy. There is no way if we rally in the S&P, it's going to be anything more than a dead cat bounce. So be careful. Don't get caught. Do not fall in love with the upside. Don't listen to TV Land because they have a reason to tell you markets are going higher. Most of their companies are publicly held. They have stock in themselves. They want you to buy. I am here to tell you the truth. The charts say no way. Dead cat bounce, maybe. Take a look at the charts, traders. Use the analysis and don't listen to what you're hearing, reading in the papers, seeing on TV. Do your analysis and see what those charts tell you. And I have a feeling you'll get a better answer from them than anybody else out there. All right, traders. If you like these videos, please subscribe to them on our YouTube spot. It's www.youtube.com/futuresanalysts. If you like the videos, please leave your comments on these videos. Gear your comments towards helping others who don't know about us to help show them what we do here and how we help. That's what we try and do, traders, with these videos, with our lessons, with our free site. We try to help many people out there. And boy, oh boy, many of you are coming. Oh, keep it up, baby. We're here. Traders, I am a broker. I'd like to be your personal broker. If you open up a trading account with me, I will act as your personal broker. I will help you get orders in and out of these markets. I will help you with the mentality behind trading, and I will be here for you if you need me. So if you'd like to open up an account directly with me, I will be here to help you, traders. Come on down to the site, open an account right there online, and I will be here to help you. We have a team of support, so you come on down, and we will make sure that you get the best of care. All right, traders, I'm ready to get out of here. I want to see what these markets are. Currencies are fluttering, and I want to play them. Give me a call anytime, day or night, 702-629-4755. And as always, please keep those emails coming. Shoot your emails out to Oscar@futuresanalysts.com. Guys, anything here?
Stops.
Stops are in. Well, hey, all right, being that you pointed to it, traders, this is one of the worst environments I've ever seen for trading in all my life. In fact, if you read all the newspapers over the weekend, I'm talking Barron's, Wall Street Journal, you name it, every one of those had a story in it, and that story was, this October is the worst on record ever for traders to try to trade through. There's never been volatility this great with such directionless trading, and we've survived through that, but I want you to understand you have to use stops in this environment, traders. If you are not trading with stops, you are waiting to be hung, because you will be hung out to dry. Place your stops, place them first, especially in the environment that we're in. Don't forget that, traders. A stop is your best friend. Don't trade without stops. Again, I say this in just about every video. Don't trade alone. Never trade alone, traders. There are hundreds and hundreds of us now at our site. We are in our chat rooms every day, and we are here in masses to help one another. We work in unison together. We do analysis together, and we help one another, and there is strength in numbers. So don't sit alone at your computers trying to figure out what's going on. Come on down to the Emini community, and let us be here to help you get through each day. All right, that's it. I don't want to know if I missed anything else, because I'm getting out the door. All right, traders, say this to yourselves every morning, every afternoon, every evening, because it'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.